Hello, everybody, and welcome to this weekly market outlook. I know it's quite been told since I did a weekly market outlook, but here I am, and let's delve into what we anticipate for this particular week. So I know a lot has been going on. And in terms of what you're looking at this particular week, of course, we begin by a focus on the DXY, gold, stocks, and also oil. And our key focus will be on the current geopolitical tensions between US, Israel, and Iran, right? So this is my name is Tim. For those we have not really interacted per se, but I believe a majority of you have been able to interact with you. But if you're meeting me for the very first time, my name is Tim, the founder of Team Forex Traders Launch. So rising geopolitical tensions, which is driving volatility. And we have been able to see Iran, the president of the US declared that they are in war, fully into war with Iran. We have seen Iran being able to retaliate even after the US attacked, and they said they're also going to attack the US. So we are seeing that kind. Other countries are being pulled in terms of which country supports the US and Israel, and which countries are supporting Iran. So this is something that is really intensifying. And the big question that everyone is asking, could this trigger the World War III? Right? So these are questions. I'm not saying that it's going to trigger World War III, but I'm asking also myself, could this be the one that being triggering the World War III? Okay, so safe havens flows are supporting gold and the USD because of the geopolitical tensions. Oil surging on supply disruption fears. Of course, we anticipate the demand for oil to increase because of the interruption in the supply chain. And of course, for the equities, you are looking at bearish sentiments, all right? Equity facing downside pressure from risk-off sentiments, okay? So that is what is going to lead us the direction of today's market analysis. So if you look at the DXY last week, this is just the brief of it. I'll be going to the charts, and you'll be able to see that last week, the dollar traded firmly amid aversion. And of course, supported by the geopolitical uncertainties, also the inflation expectations and macro stability, which also underpin the US demand. We saw the CPI, the core PPI, which came out positive, of course, a stronger dollar, right? It came out positive than anticipated. So we are looking at the inflation expectations and also the macro stability, which are underpinning the USD and USD demand. And we saw gold, the dollar index trading sideways on in ranges and around 97.6 thereabout. So we saw that. So this particular week, we're gonna look at it in the charts, of course, what we are looking at, but theoretical, of course, even before we go to the charts, I'm looking at a buyer's neutral, maybe probably to bullish, and this is supported or will be supported by the continued tension, which may support the safe haven demand, because remember, the dollar itself is a safe haven. All right. So, and of course, it's important to watch key US economic data releases that we are looking at. Of course, this week being the NFP week is the first week of the month. So we have the key major data, the employment data for the USD. Of course, it's going to shape how the DXY is going to unfold. Then we have, you're going to look at gold. Last week, we saw gold gained on geopolitical escalations, and the prices of gold were able to shoot last week to close to around where the market closed at around 5279.95, right? So the prices were able to push the entire of that day. Actually, the lowest of the day was 5166.77, right? So it was really quite a bullish day on Friday. Okay. So we witnessed that. Of course, even the market didn't respect the macros that we had for Friday. That is the PPI data, which came out positive, and we expected probably gold to sell, but it didn't respect that because the heightened geopolitical tensions. Okay, so the elevated volatility around headlines, because you're seeing headlines that the president of the US saying that they are in full war with the Iran, Israel as well being able to, also they're also in the fight. Also, if you look at other countries that are supporting Iran, of course, they're also, we are seeing a lot of mixed headlines online, and of course, this is creating some volatility in the market. The reason why we need, when we approach this particular week now, as you are waiting for this particular week, of course, for gold, myself, I'm looking at the bullish buyers, and of course, everybody's looking at the bullish buyers. But the key question is, how do we take the positions now? Because if, for instance, today we're gonna see maybe probably the markets open up with gaps, right? So if the market open up with gaps, how are we going to position ourselves? We all know maybe probably on spitting bullish, all right, because of the tensions which are persisting and escalating. So buying interest on dips, that is very likely. So anytime we see gold push on the dips, so it's likely to look for potential buying opportunities, and also to watch for the USD strength and the bond yields, because they're gonna also dictate in terms of how the prices of gold are gonna unfold. Then also we look at the stocks market last week. Basically, we looked at the equities pressured by risk of flows. So we're able to see the tech and growth stocks being able to underperform, and volatility increasing towards the week close, of course, reacting to the geopolitical tensions, which we anticipate generally to be bearish, the stocks market to be bearish as the geopolitical tensions continue to escalate, right? So, and this week, of course, that's what I mentioned. The buyers is cautious bias towards the bearish sentiments. Of course, higher oil may weigh on margins and sentiments. And of course, you're looking at monitoring the geopolitical development closely, because they will also have some impacts, of course, on the stock market. Okay, so when you look at the prices of oil, what we are saying here is that oil markets, we are looking at the price. Last week, the price surged due to supply disruption fears, the Strait of Hormuz risk premium increasing, as well as the high oil fuel inflation concern. Remember, the Strait of Hormuz is a very crucial port in terms of the supply chain for oil. And of course, the moment we have disruptions in the supply chain, we anticipate to see a surge in demand of the prices of oil. Okay, so the geopolitical risk, U.S., Israel, and Iran. Of course, you are seeing this escalation, which is increasing, and of course. The escalation increases the global risk premium, whereby we are looking at boosts in terms of the safe havens, that is gold, USD. Of course, also the CHF is also a safe haven, so we anticipate also it to see some strength for the CHF. There is a lot of pressure that is coming in from for the equities market, of course, because traders or investors, they're trying to take a stance whereby they are running from the equity market, of course, because of the risk of sentiment. So we are trying to see that shift in terms of a realignment in terms of the stocks market. So the reason why we are looking at potentially bearish, cautious to bearish sentiments for the stocks market, okay, because of the geopoliticals and also the macro concerns. Okay, so with that, I think we can be able to go to the charts so that we can be able to see some key technical levels that we are looking at, right? So but before we go to that, for the stocks market, it's really quite important for the stocks market also to mention the US and the global. Of course, the risk of sentiment could continue as investors digest the Middle East development. You want to look at the volatility indices, index, that is the volatility index may rise, indicating fear premium. Of course, the earnings and the US jobs data headlines are next, which you are expecting. Of course, they could ship or have some impact in the stocks market. Okay, so for the oil market, of course, like I said, supply risk from potential disruptions around the Strait of Hormuz, which remains number one. And if shipping lanes are fully constrained, therefore we are going to see prices could surge beyond current levels because of the increased demand. Of course, you are seeing there is disruption, especially in terms of the airways. Most of the airports have been able to close indefinitely or terminate their services, the flights that are flying towards the Middle East because of what is currently happening. So if the shipping lanes also are going to be affected, where most of the oil is, the supply chain of oil relies mostly on the shipments, therefore we're going to see the price continue to skyrocket beyond that particular measure that we could look at. Okay, so geopolitical impact across all market. Of course, looking at the risk, the geopolitical risk, US, Israel, and Iran, whatever is going. Of course, now when you look at maybe probably the oil, so we are talking about risk of supply bottleneck could keep prices of oil elevated or generate fresh charges here. Also, we are looking at higher oil, which translates to inflationary pressures, of course, supporting commodities while cyclical growth. And when it comes to gold, these are the safe havens, right? So we are looking at or anticipating the safe haven demand increasing due to the fear and risk aversion, right? And that looks actually poised to stay strong as the headlines dominate the risk pricing. So the big question is here, where next to gold? Are we going to reach the 6,000 levels? Because the last time we saw the price of gold push all the way to around 55. $5,500 per ounce. So are we targeting the 6,000 levels now? Okay, that is the big questions. Okay, so for the dollar index, it may benefit from the risk aversion, but persistent safe haven rotation to gold, yen, and treasuries. Of course, that could limit the upside of the DXY. Okay, so that's what we are looking at. So the cross market impact, basically, that's the summation of it. Gold bullish on fear uncertainties, oil bullish on supply risk, USD supported by risk aversion, and stocks are vulnerable to further downside because of the increased geopolitical tensions. Okay, so strategic trading considerations. Of course, trade headlines will with disciplined risk management. So we are going to see a lot of trade headlines because of these escalated geopolitical tensions. So it's also good to approach the market with discipline and proper risk management, because we anticipate volatility to spike during geopolitical updates. And also it's important to watch the correlation shift between the USD and gold. This is the time when gold and the USD, we know the normal correlation is negatively correlated. When the dollar index is strong, gold tends to be weaker. And when the dollar index is, when the dollar index is strong, gold tends to sell. And when the dollar index is weak, gold tends to buy. So this time we might see both of them being strong, and still the prices of gold are pushing higher. So it's good to watch on that correlation shifts. And also now it's important, position sizing is critical in high risk environments. So ensure that you minimize your risk as much as you can, because you don't want to lose all your investments or all your trading capital because of the high volatility due to the geopolitical tensions. Okay, so now let's go to the charts and try to look at some of the key technical levels that we are anticipating. And of course, we begin by looking at the calendar of the week, what we are anticipating for the weekly calendar. So let me get that into place. All right, so let me share that screen, the entire of my screen. So the entire of my screen, and there we are. So that is the calendar that we are looking at this particular week. Okay, so I'm not sure whether it's showing. Let me just do that and share again. So let me share that again. Share screen. So let me share the Forex Factory calendar, or the Forex Factory calendar. So yes, so this is what we are anticipating for this particular week. Of course, we are looking at tomorrow. The markets giving us the ISM manufacturing PMI for the dollar at 6 p.m. East African time, or GMT +3 or UTC +3. And then on Tuesday we'll be having the governor for the Reserve Bank of Australia, and also the governor for the BOJ will be speaking. Of course, the speeches, we want to capture them in terms of their sentiments, whether hawkish or dovish. Then now we'll be having at 3:30 p.m. on Tuesday, we'll be having the annual budget release for GBP. So we'll be having all these data, but what I'm really focused on is the USD news. So let me filter that and come specifically to the dollar. Okay, to the dollar, so that we can see what we are anticipating. So for the dollar on Tuesday, we don't have any high impact news. On Wednesday, we'll be looking at the ADP non-farm employment change together with the ISM service PMI at 4:15 and 6 p.m. respectively. That is a UTC +3 or GMT +3. On Thursday, we'll be looking at the unemployment claims. And then on Friday, these are the major news that we'll be looking at: the average hourly earnings, the core, the non-farm employment change, and the unemployment rate together with the core retail sales. So these will be very critical data. We are looking at the non-farm employment change from 130K to 58K, the average hourly earnings from 0.4% to 0.3%, and also the unemployment claims the unemployment rate remained the same at 4.3%. So these will be very critical. Again, we'll be live on this particular session, whereby we'll be able to digest the numbers, the NFP numbers that are going to come out, and what we anticipate in terms of how the markets are gonna, what we anticipate, basically looking at, because the Fed looks at this kind of numbers so as to guide us, to make a decision in terms of the interest rate decision. Okay, so these numbers will be very crucial, and will be live to interpret them, and also being able to understand how are the markets likely to react on that. Okay, so besides that, let's go to the technicals. So let me share my technical chart. So we look at the technicals here. We begin with the dollar index. So this is the dollar index on the daily time frame, right? So we see the prices, like I said, they've been trading sideways between around 98.143 and 97.40. So the markets have been trading sideways for the past few days. That is after the price were able to break below this particular level, right? To break below this particular level, then we saw the price is pushing up again. So that's what we are looking at. Then the price retracing that and pushing higher. So we are anticipating the market to open maybe probably the gaps, and this is the level, a key level that we'll be looking at between 99.568 and 99.138 on the daily time frame, where the price is likely to react on this particular point. But the moment we break above this level, you're going to see more bullish sentiment. So let's monitor that and see what the markets are gonna react. So I anticipate maybe probably once the market open up, we might see that push on the upper direction, then maybe probably something like that. But this is just a key level for us to watch, because we are looking at a cautious and anticipating a bullish sentiments, but again in a cautious manner for the dollar index, because of the increased geopolitical tensions. Okay, so when you look at maybe probably oil, let me look at oil. So the US oil. So this is the US oil, okay, the US oil. So on the daily time frame, of course, on Friday, we saw the price being able to surge to these particular levels. But of course, these were some good buying points. I remember we had discussed this in one of our daily live market analysis. We had talked about this being a key point to look at some buying opportunities, and you can see the price retraced all the way to that particular level, and we saw the price is pushing up. So how higher are we seeing the price pushing? So this will be a key point of interest to look at that particular point. So once we see the price break this particular level here, we might be able to anticipate. Sorry, I'm looking at the wrong one. So let me just share the correct one. I think it should be this one. Sorry for that. So this is what we are looking at. Of course, it's just an implication of the same. There is not much difference. You can see we had looked at the price coming to this level for us to look at some buying opportunities, and then now this is the key level where the price is going to, all right? So once the price reaches to this particular level, then we might see maybe probably a retracement, a slight retracement on the downside, and then now we can program ourselves in terms of buying. And here we'll be looking at the prices coming all the way to these liquidity levels. These is the levels that we'll be working on at around 77.618, which also rhymes together with this order block, even though it was tested there. So that's the key level that we'll be looking at the price coming to that particular point of interest. Okay, so when we narrow down on the 4-hour time frame, of course, in terms of taking our position, so we might see the price. Let me push these slightly, adjust these slightly to that particular point. So we might see the price, push all the way up to this particular point. Okay, we might see the price push all the way to this particular level, and any retracement on the downside, of course, will give us those opportunities to buy. So any dips, we'll be looking at potential buying opportunities. So if price pushes up to this level and it creates another BOS around this particular point, so this level, it breaks above those highs, all right? So we see the bodies of the candlesticks closing above that. So we'll be looking at a potential retracement of the dips, looking at potentially buying the dips. The break above this level, therefore, will usher us to that this other next level, around 77.54. Of course, we'll keep abreast. We'll keep the updates in terms of what's happening. Of course, even joining our live market analysis. So we will be able to do that, right? So just keep abreast of what we are looking at. But these are the levels that we are looking at, even I mean, on the longer time frame, right? Even as we look at how far the prices can be able to go. Okay, so let's monitor that and see what's really going to transpire on US oil. Okay, so when you look at the UK oil, right? When you look at the UK oil, okay, so this is the UK oil. So we are looking at similar sentiments. Of course, we had talked about these buys here in one of our live market analysis. I think on Thursday we discussed that, and we saw the price retrace and activate that particular region, and now we are pushing higher. So a retracement of prices probably to these levels should also warrant some more buys, especially when you see the price coming to around at this particular point where we have the bullish engulfing this level. So let me mark that. So the price coming to that level, so that should give us some buying opportunities. Of course, what you're targeting is the price pushing higher to about $80.38 dollars per barrel, which also rhymes very well with this particular daily level at around that particular point. Okay, so that's the key levels that we'll be looking at. So we said any buy any dips for oil, both UK oil and US oil, we'll be looking at some potentially buying opportunities. That is buying the dips. Okay, guided by our focus being on the geopolitical tensions that are escalating, right? So then let's look at the stocks indices. Look at maybe probably the S&P 500. Okay, that is S&P 500. And we see what's really happening around these. So we saw quite some bearish sentiment because of the price of the tensions. So this tells you that also the stocks, the individual stocks, of course, they are not really doing really quite well, because this represents the tracking of 500 large companies in the US. So we are seeing those bearish sentiments. So here we might continue seeing some bit bearish sentiments, but our key focus, or the key focus point, should be around this support level. We have been having that particular point there, and also we have this other level here, all right? So these should be our key focus points in terms of how far the price can be able to go. The moment it breaks that level, of course, we'll be talking about this other particular level around that particular point. So let's keep monitoring that. If you look at maybe probably the US 30, which is also a stock index. So you see everything on the stocks market. We are looking at the bearish sentiments. You see the kind of pattern we are seeing here. This is a bearish pin bar on Thursday and the price closing a bearish on Friday. So this means that we are likely to see more bearish prices. And of course, maybe probably the price coming all the way to 46,167. Okay, so those are the key points that we'll be able to monitor. But let me look at gold even as we wind up. All right, so let me look at gold so that we wind up. More of these you can catch us live on the daily live market analysis that we usually do Monday to Thursday, 10 a.m. to 11 a.m. So this is gold. We saw the prices of gold are pushing higher, right? This day was quite bearish from about 51.66 to about 52.79.95. Okay, so we are seeing quite a bullish sentiment here. When you come to the 4-hour time frame, of course, we are looking at even more bullish sentiment, because this kind of structure we see here, this is a BOS that has been created. So it means in case we get the market coming to these particular levels where we have these dips, okay? So if you're looking at it in terms of the order block, if you're looking at it in terms of supply and demand, this is a key level, because this is a base rally. So we expect the price to retrace back again to this level, which is a demand level, and we see more buying prices. So that is the level that we'll be looking at on the daily time frame. How far on the 4-hour time frame, how far above we can be able to go? Of course, we are looking at this particular zone as well. That is between 55.97 and 55.31, right? So this is where we have the all-time highs. So on the 1-hour time frame, of course, when we come to this particular session or this particular level, we want to recognize, or we identify these BOS that happened around this particular point. So that tells us that within this level we have a key point of interest, which now when we come to like the 15 minutes time frame, therefore we want to minimize that particular point to that level. So in case we see the price come to these levels, these are points to look at potential buying opportunities. These dips, we are looking at buying the dips from these particular levels. All right, so that's what we'll be monitoring. Now when we come to this other particular level, we can be able to minimize it like that. I know it's quite a bigger one, so you can go to the 15 minutes time frame. And remember, these levels, it's not a must you trade them. If they are big, if they cannot be able to accommodate within your risk level, not unless maybe probably you work with now the idea of, because when you measure the risk here, we're talking about 200 pips. So not unless now you look at the idea of the rejection block. So we can maybe probably look at it to that particular point where we have that rejection block, and also this level as well would warrant some buying opportunities. Okay, so all these are tradable levels. Remember, according to how I trade, okay, because you can see these 200 pips, 273 pips from here to here, we are talking about 423 pips. Right now, the pip value of gold is very tight. So the reason why you don't want to joke around with your lot sizes, you don't want to joke around with your risk management practices. Okay, so this is why you take a trade. Once in profit, take some partials, put your stop loss at BE, so that you can be able to protect what you have, so that you can be able to trade risk-free trades. All right, so that's what I'm looking at. For more insights, I'll be able to share during our live market analysis, of course, and keep updating you, especially those who have joined the 52 weeks trading challenge. We will be walking this journey together. Remember what I said, this is not promising crazy returns here. Basically, what we want to build is consistency, discipline, and also the patience. That's what we want to build up in those 52 weeks. So the reason why I'm not saying we are compounding $100, maybe probably to 10K USD, 1 million USD. No, I'm not putting any figure onto that. Whatever you'll be able to compound to at the end of the 52 weeks, right? That will be significant. That will be it, right? So whatever you can be able to do that's very significant, because the key thing is for you to gain the consistency. The key thing is for you to be patient. The key thing is for you to be disciplined. And of course, I'll be sharing a lot of tools that will help you in terms of keeping abreast of what's happening, in terms of your journaling, in terms of your analysis checklist, a lot of useful tools that I'll be able to share for those people who have joined, and I believe it's going to be amazing. I'm looking at receiving a lot of testimonies from this 52 weeks challenge, and I still welcome you. If you have not joined, please make time to join. There is a video I posted on Saturday explaining how we're gonna do it, so make sure you watch that particular video and let's journey together in these 52 weeks of trading challenge. Okay, so thank you so much, and I believe what I can say is I want to believe that even in this particular week, with the tensions, the geopolitical tensions escalating, so I'm looking forward whereby you'll be able to not to overtrade, to always look for A+ setups. If there is no setup, there should be no trading, because again, the key thing is for you to be able to protect your capital. Okay, so I wish you an amazing week and a happy new month. How I believe, how I pray that the month of March will be quite a fruitful month for us as traders. So thank you. Cheers. Take care and see you at the top.